So the WTI, what is happening here? So I'm looking at the weekly chart for you, and the reason I find it really very exciting at the moment is the fact that we are touching, if you can see here, we're touching the 200 weekly period moving average, which is coming in at 74.67. So you're going to be asking, I think, you're going to be asking, well, how does that involve our day-to-day trading? Well, it does, because what you're going to have this tug of war soon between the buyers of oil and the sellers of oil for various reasons. Let me just show you another time frame. If we look at a daily chart, you can see over here that yesterday we closed just on that 200-day moving average. Now, the 200-day moving average is normally gauged as a trend directional event. So, yes, obviously we have broken it a few times and rebounded back. But if you look at the overall bigger picture, you can see that oil really is going to struggle to keep downside momentum going unless we cannot close back above that 200-day moving average on a close basis and a close basis only. So back to the weekly chart. You can see the weekly chart. If you take this whole move down, you can see we retraced 50% of the move lower, 50%. And from that point, we carried on lower. If you look at the weekly indicators, you can see that the trend is looking to be turning to the downside. I know that sounds bizarre, but it's followed it all the way down from the highs of 120, 190, well, virtually 120. It's followed it all the way down, you can see here. And now it's turning negative off of neutral levels. Bear in mind, this is a weekly chart, so therefore it's going to have less impact, if you like, to short-term trading. That's the difference. It's going to be less. It's more the institutional traders that are going to come in and defend that 74.75 level. That I would think they're going to come in and defend it at that point. Now, underneath that, you've got the 55-day weekly average, and we all know oil does love to oscillate on that 55-day. That's coming in at 73. If you look at the S2 on the weeklies, you can see that's coming in 72.58. So we're around about sort of that area. So really, it needs to break below 72.5 to keep this downside momentum going. If you look back to the daily chart, we have extreme oversold levels. Is it beginning to turn? Not yet, but it's oscillating along that lower end of the scale. In fact, it's quite low. I use a 10 and 90 parameter for any of the averages that are any of the indicators that I use. I use that. I use the 90-10. I want to know if it's really overbought or really oversold. That's basically why I do it. Years ago, it used to be 70-30. No, not anymore. So we're approaching oversold levels. We currently are below the 200-day moving average. So in today's session, if we can maintain this weakness, you can easily see it come back to here, which would be around the 67 mark. Now, considering where oil's come from, this year, 120 to 67, it's not been a bad run. This will be critical, I think. I think this area is going to be critical to oil over the next coming days and weeks. Back to the weekly chart for a sec. So the weekly charts are not. You can see that the indicators are turning bearish off of neutral levels. This is where we're going to have this tug of war. You're going to have the day traders and the institutional traders all looking at around the same level, all thinking they know what direction it's going to go to. So what you could see is a short-term bounce over the next 2 days and then push it lower. If the week ends up below 74.5, there is no way that the market will be able to sustain any buying attempts at it. And if it closes below 73, 72.5, it's 67. 67 will be the level that will attract prices lower. The reason it will is because it's an obvious level to aim for if you are trading oil. Good luck. My name is Carol Harmer, owner of Charmer Trading, and I will catch you all later.